An exciting time to be in cryptos right now. After several months of doom and gloom and a lot of pulling back, we have ourselves the makings of the beginning of a new rally, a lot of divergences, and we have a lot of signs that we're going to continue to rally. This is, of course, covering Bitcoin, which is the single biggest cryptocurrency. It's the OG crypto, the one that most people think of when they think about crypto. And specifically in this video, we're covering BITO, the BITO ETF, as I'm going to be referring to it from here onwards. And this is the ProShares Bitcoin Strategy ETF. The reason it's exciting is that it has a relatively liquid options market. And as far as I know, there's no other ETFs that are based on cryptocurrency futures that have options that you can play. So exciting time, and Bitcoin having such a reliable, robust pattern, and because it follows the Elliott Wave Fibonacci targets so perfectly, is a great candidate for potential leverage plays. So without any further ado, we're going to look at this chart here. This is the 30-minute Bitcoin chart. Going to be covering this in a lot of other videos in more detail, but we have a 1-2 in place and possibly completing a third wave on a relatively small degree. And we have the divergences that we're looking for. BITO looks the same way. Because BITO only trades during the daytime, during market hours, it doesn't have to zoom in a bit to actually show you what we have here. But we hit a bottom on January 24th, which is when Bitcoin hit its bottom. And the structure looks almost identical to Bitcoin, where you had a very clear through wave pattern to finish, to rally, look like a fake out, possibly a truncated fifth wave to finish our crash. And then we got our 5 up, and we've been kind of off to the races ever since. Shifting to the big picture, just to give you guys an idea of why this is exciting. Remember, we've hit quite an inflection point. I had a triangle set up here at one point that this could possibly be a fourth wave triangle within the C wave down in this blue box, but we pierced the top of the triangle and we didn't quite make it as low as we should have in the bottom of the triangle. So really the triangle, for all our intents purposes, is dead. And I don't see any reason why we would descend again. Now, if we have a sharp reversal, we could still drop in this box below the $30,000 mark, but I'm not seeing any signs of that. You can clearly see the MACD divergence, the MACD divergence, and even more so when you go back to May. So that is our big picture. Well, those are the reasons why I think we're done with the correction. Where are we big picture in the Elliott Wave pattern over the longer term? We had our everything crash in March of 2020, and we have what I'm calling 3 waves up, especially if you consider this top in August of 2020 to be the 1 and the 2. And this hit just under the 1.618 extension, which is a very common target for the third wave in Elliott Wave patterns in an impulse. We've had a 4th wave, and so far my primary pattern says that we're done with the 4th wave, that we don't have any lower to go. And as a matter of fact, this should be colored in green to match our current current green primary. I know I haven't updated the text here, but trust me, that is what I'm expecting. And we have what is probably an impulsive pattern up, maybe a zigzag, not sure. Wave 2, what comes after the second wave? The third wave. And whether this completes in a diagonal fashion, we get to $80,000 to $97,000, $98,000, or we have a full-on impulse when we get past $111,000 just on third wave alone, there's a lot of upside, and it could happen fast because third waves are the fastest and most explosive part of the Elliott Wave cycle. We saw that here where we were at $9,900 on in September of 2020, and we went all up to $42,000 within just a matter of 4 months, 5 months. So spectacular rally potential cannot be discounted at all. So that is the excitement. Now, 5th waves generally move a bit slower, but here's 2 things that work in your favor. The third wave of the 5th wave is generally pretty powerful too. It can rival what you see in the third wave overall. In addition, cryptos and commodities are known. They're famous for having 5th wave extensions. So if this thing takes off for the moon, the third wave could be one of the first indications that we're going to go parabolic. So that is the background. Now, BITO is a relatively new ETF, and I had to basically backtrack and recalculate, kind of reverse engineer this chart because there's no history. I came up with the conversion factors. So it's about $1,556. So basically your BITO number, the value, so 2794 times 1556 will give you your Bitcoin price in dollars right now. That is not a hard rule. Sometimes these ETFs and funds, they don't track perfectly. I know that SLV, I think it was like a 1.07 ratio, something like that. And it's shifted over the past year or so. So don't be surprised. There's all sorts of reasons why they don't track properly. But for our current purposes, this is the pattern. We had our third wave top at 42.66. This is what we're calling the 4th wave. The red pattern is the alternate in case we do turn around and have that lower low, which again, I see as a small probability right now. We have our smaller degree 1, 2 in place. So based on that and all these Fibonacci confluences, our ultimate top should fall, well, it should get to somewhere around $66. That would be the ultimate top for our fifth wave target. However, at the same time, if you assume this is a 1, 2 and we're completing an ending diagonal pattern, then, well, our targets are as follows. We would have our third wave get somewhere in this purple box between $50 and $62. And our ultimate finishing would be somewhere between $86, $99, somewhere in there. Oftentimes you see that throw over. So you could see how we could actually have a basically go through this top trend line. The reason I think this is an ending diagonal is because there's more confluences that way. And because of the depth of this second wave, there's just a lot of reasons why this is probably a diagonal. This also applies to Ethereum, in which I expect us to finish the fifth wave ultimately in ending diagonal fashion. Another key point about ending diagonals is that you have very sharp retraces. So as I mentioned, our second wave was really deep. Expect a super deep fourth wave as well. So if you're just holding BITO, maybe in a 401k or something, might be a good time to take at least some profit, even if you're making short-term trades. If you're playing options, you do not want to hold through this fourth wave correction. It will eat all your profits away. Fourth waves sometimes take forever. This fifth wave top may take another year. You never know. So in the short term, we have pretty good setup in place. MACD doesn't really tell us much because there's so little history, but there's definitely a divergence present. You can see how it's a little less oversold here as we had a lower low again on January 26th. We had our pullback and we are about to take off right now. Our intermediate term targets, well, I'm expecting somewhere in the $30 range. And the reason for that is that because it's an ending diagonal setup, we expect each of the subwaves to take a three wave form. There's no way for me to know exactly where the A wave and the B wave are going to go. The only robust target I have is where the C wave would go. The C wave would mark the top of our third wave. So if that's what we're expecting, it's just a rough estimate for what we can do. So we're going to see how this plays out. I would expect us to get to about 34.47, maybe have a pullback, and then you could maybe make a leveraged BITO play at the bottom of this B wave.